I never thought a simple email to my insurance company would bring down an entire HOA and leave 300 families without coverage. But that's exactly what happened in Pine Ridge, Arizona. My name is Aaron O'Brien, and I'm a 42-year-old software engineer who bought my home in the Sunset Valley community 3 years ago. It was a beautiful planned development with cookie-cutter houses, manicured lawns, and the kind of oppressive HOA that makes you question why you ever wanted to own property in the first place. The president was a woman named Karen Whitmore, and she embodied every stereotype you could imagine. Mid-50s, perfectly highlighted blonde hair, oversized sunglasses perpetually perched on her head, and an attitude that suggested she believed her position made her some kind of feudal lord. The trouble started on a Wednesday morning in March when I was working from home. I'd just finished a video conference when I heard a knock at my door. Opening it, I found Karen standing there with her ever-present clipboard and a fake smile that didn't reach her eyes. "Aaron, we need to talk about your fence," she said, not bothering with pleasantries. I looked past her at the 6-foot privacy fence I'd installed along my backyard 3 months earlier. "What about it?" "It's not the approved color. The HOA covenant clearly states all fences must be desert tan, and yours is more of a beige." She held up a paint chip card like it was evidence in a murder trial. I squinted at the fence, then at her card. "Karen, that's the exact paint color the HOA approved. I have the email confirmation." "Well, it looks different in person. You'll need to repaint it." She made a note on her clipboard with theatrical authority. "I'm not repainting a fence I just installed. The color was approved in writing." Her expression hardened. "Then I'll have to issue a fine, $500, and another $500 for every week you refuse to comply." This was typical Karen behavior. Over the past 3 years, she had fined me for leaving my garbage cans visible from the street 15 minutes past the deadline, for having a garden gnome she deemed inappropriate lawn ornamentation, and for parking my work van in my own driveway because it had a small company logo on the side. But this fence situation felt different, more arbitrary, more petty. "You do what you need to do, Karen," I said, closing the door. 2 days later, I received a certified letter informing me of the $500 fine and threatening legal action if I didn't repaint the fence within 14 days. That's when I decided to dig deeper into the HOA's operations. Something about Karen's increasingly aggressive behavior over the years had always struck me as off, and I wanted to understand exactly what rights she actually had. I spent that weekend reading through every page of our HOA covenant, the bylaws, and the state laws governing homeowners associations in Arizona. What I found was enlightening. The HOA was required to maintain certain insurance policies, including a master insurance policy that covered all the common areas and provided liability protection for the community. According to Arizona law, this wasn't optional. It was mandatory. On Monday morning, I decided to check if our HOA actually had this coverage. I called our HOA management company, Summit Property Management, and asked to see proof of insurance. The woman who answered, a tired-sounding receptionist named Maria, told me she would have to get back to me. "It's a simple request," I said. "Homeowners have the right to review HOA insurance policies." "I understand, Mr. O'Brien. I just need to pull the documents. Can I call you back this afternoon?" She didn't call back that afternoon or the next day. By Wednesday, I had left 3 messages. Finally, on Thursday, I received a call from the management company's director, a man named Robert Chen. "Mr. O'Brien, I'm calling about your insurance inquiry," he said, his voice cautious. "Great. Can you email me the proof of insurance?" There was a pause. "We're working on getting that documentation together. The policy is up for renewal right now, so things are a bit disorganized." "When does it renew?" Another pause. "I'll have to check with Mrs. Whitmore and get back to you." That's when alarm bells started ringing in my head. A professional management company should have immediate access to insurance documents. The evasiveness suggested something was wrong. I decided to go directly to the source. I looked up the insurance company that had previously covered our HOA. It was listed in old board meeting minutes I found on the community website. The company was called Western States Insurance Group, based in Phoenix. Calling them was illuminating. "Western States Insurance, this is Jennifer speaking. How can I help you?" "Hi, Jennifer. My name is Aaron O'Brien. I'm a homeowner in the Sunset Valley Community HOA in Pine Ridge, and I'm calling to verify our master insurance policy. One moment, let me pull up that account. I heard keyboard clicking, then silence. Sir, I'm showing that we canceled that policy 14 months ago. My stomach dropped. Canceled? Why? I can't discuss the specific reasons, but the policy was terminated by mutual agreement in January of last year. Do you know if the HOA obtained coverage elsewhere? I wouldn't have that information, sir. You would need to speak with your HOA board. I thanked her and hung up, my mind racing. Our HOA had been operating without insurance for over a year. 300 homes, a community pool, 2 playgrounds, a clubhouse, and miles of common area landscaping, all completely uninsured. If someone got injured in a common area, if there was a lawsuit, if anything happened, the HOA had no protection, which meant the homeowners had no protection. This was serious, potentially catastrophic. And Karen Whitmore had been too busy harassing people about fence colors to ensure the community had basic, legally required insurance coverage. I immediately sent an email to the HOA board requesting an emergency meeting to discuss the insurance situation. I copied all 5 board members, including Karen. The response I got 2 hours later was from Karen alone. Aaron, your constant harassment of the board is noted. We have insurance. Your request for a meeting is denied. Focus on repainting your fence. That did it. I wasn't going to let this go. I started researching Arizona HOA law more thoroughly and discovered that homeowners could file complaints with the Arizona Department of Real Estate if an HOA violated state regulations. I also found a lawyer who specialized in HOA disputes, a woman named Ellen Davis. Ellen's office was in Scottsdale, about an hour from Pine Ridge. I drove down that Friday afternoon and met with her in a modest office filled with law books and case files. Tell me everything, she said, settling behind her desk with a legal pad. I explained the situation, from Karen's harassment to the missing insurance policy. Ellen's expression grew increasingly serious as I spoke. If what you're saying is true, and the HOA has been operating without master insurance for 14 months, that's a massive violation, she said. Arizona requires HOAs to maintain certain coverages. The board members could be personally liable for any incidents that occurred during this uninsured period. What should I do? First, we need to confirm there's really no insurance. You've checked with the old carrier, but we should verify they didn't get coverage elsewhere. Second, you need to formally notify the board in writing of this issue. If they don't respond appropriately, you can file a complaint with the state and potentially sue the board for breach of fiduciary duty. How much would that cost? Ellen smiled. In cases like this, if you win, the HOA typically has to pay your legal fees. But let's start with the formal notification and see how they respond. I left her office with a plan. Ellen drafted a formal letter to the HOA board outlining the insurance concern and requesting immediate documentation of current coverage. The letter cited specific Arizona statutes and made clear that failure to maintain proper insurance was a serious violation that could result in personal liability for board members. We sent the letter via certified mail to all 5 board members on Monday. By Wednesday, I had received calls from 3 of them, none of them Karen. The first was Michael Torres, the board treasurer. Aaron, I got your letter. I'm looking into the insurance situation right now. I'll be honest, I didn't know it had lapsed. Karen handles most of the day-to-day operations. The second was Patricia Henderson, the secretary. I'm horrified if this is true. I'm demanding a full board meeting this week. This is not okay. The third was James Sullivan, a regular board member. Man, I had no idea. Karen told us everything was fine. I feel like an idiot for not checking. Karen, predictably, did not call. Neither did the vice president, a woman named Brenda Walsh, who was essentially Karen's lapdog. The emergency board meeting was scheduled for Thursday evening at the community clubhouse. I arrived 15 minutes early and found about 30 other homeowners already there, word having spread through the neighborhood about the insurance issue. The mood was tense. Karen arrived exactly on time, striding into the room like she owned it. She took her seat at the head table, along with the other 4 board members. Patricia looked furious. Michael looked worried. James looked uncomfortable. Brenda looked confused, which was her default expression. Karen gavelled the meeting to order. We're here because Aaron O'Brien has made some serious accusations about our insurance coverage. I want to state for the record that these accusations are false and defamatory. I stood up. Then show us the proof of insurance. Karen's face flushed. I don't have to show you anything. Insurance matters are confidential board business. Ellen Davis, who had accompanied me, stood. Actually, Mrs. Whitmore, Arizona law requires HOAs to make insurance policies available for homeowner inspection. It's not confidential. And who are you? Karen demanded. I'm Ellen Davis, Mr. O'Brien's attorney. I specialize in HOA law. The room got very quiet. Patricia leaned forward. Karen, just show us the insurance documents. If we have coverage, this all goes away. Karen's jaw tightened. I don't have them with me. Then call the management company, Michael said. Robert should be able to email them right now. Karen fumbled with her phone. We all waited in silence as she made the call. Her conversation was brief and hushed. When she hung up, her face was pale. Robert says he'll have the documents tomorrow. That's not good enough, Patricia said. I'm calling him myself. She dialed, putting the call on speaker. Robert Chen's voice filled the room. Hello? Robert, this is Patricia Henderson from the Sunset Valley HOA Board. We need proof of our master insurance policy right now, not tomorrow. Now. There was a long pause. Patricia, I don't think this is the right forum for this discussion. Robert, there are 300 families in this room who need to know if they are insured. Send the documents to my email in the next 5 minutes, or we're firing Summit Property Management tonight. I can't send what doesn't exist, Robert finally said. The HOA hasn't had master insurance since January of last year. We've been telling Mrs. Whitmore for months that she needs to get coverage, but she keeps saying she's working on it. The room erupted. Homeowners started shouting questions. Karen tried to gavel for order but was drowned out. Patricia looked like she might leap across the table at Karen. How could you let this happen? Patricia shouted at Karen. Do you understand what you've done? Karen stood, her face crimson. The insurance companies wanted too much money. The premiums tripled after we had those pool incidents. I was trying to find affordable coverage. For 14 months? Michael said, his voice shaking. You've left us exposed for 14 months? I've been working on it, Karen insisted. Ellen stood again. Mrs. Whitmore, what pool incidents are you referring to? Karen's mouth opened and closed. She had said too much. What pool incidents, Karen? Patricia demanded. There were a couple of minor injuries, Karen said dismissively. Nothing serious. James Sullivan was scrolling through his phone. I don't remember any reports of pool injuries in the meeting minutes. They were handled privately, Karen said. This was getting worse by the second. Not only had Karen let the insurance lapse, but she had apparently been hiding safety incidents from the board. I raised my hand. How many incidents? That's confidential, Karen snapped. Nothing is confidential anymore, Patricia said. How many, Karen? 3 over the past 2 years. What kind of injuries? Ellen asked. Karen sat down, defeated. A child broke his arm on the pool slide, an elderly woman slipped on the deck and broke her hip, and a teenager hit his head on the diving board and needed stitches. The room was dead silent now. These weren't minor incidents. These were serious injuries that should have been reported to the insurance company and the board. Did any of these people file claims? Ellen asked. I settled with them, Karen said quietly. You settled with them? Patricia's voice was dangerously low. With what money? HOA funds, reserves. Michael was frantically typing on his laptop. Karen, our reserves are supposed to have $150,000. We only have $60,000. I had to pay the settlements, Karen said defensively. The first family wanted $40,000. The elderly woman wanted $30,000. The teenager's family took $20,000. I did the math quickly. That was $90,000 paid out in settlements, without board approval, without insurance, and apparently without proper documentation. Karen Whitmore hadn't just let the insurance lapse. She had been running the HOA like her personal fiefdom, paying out large sums of money to cover up safety issues and keep people from suing. Ellen was writing furiously in her notebook. Mrs. Whitmore, did you have board approval for these settlements? I was protecting the community, Karen said. That's a no, Patricia said. She looked at the other board members. I move to immediately remove Karen Whitmore as HOA president and from the board entirely for gross misconduct. Second, Michael and James said simultaneously. Brenda looked bewildered. But Karen's been president for 8 years. Vote, Patricia commanded. All in favor? Patricia, Michael, and James raised their hands. Opposed? Only Brenda raised her hand. Motion carries. Karen, you're removed from the board effective immediately. Please leave the meeting. Karen stood, gathering her things. You're all making a huge mistake. I've dedicated years to this community. You've exposed us to lawsuits and financial ruin, Patricia said coldly. Get out. Karen left, slamming the door behind her. The homeowners in the room started talking all at once. Patricia gavelled for order. Everyone, please. I know this is a disaster, but we need to handle it systematically. First priority is getting insurance coverage immediately. Second is a complete financial audit. Third is figuring out our legal exposure from these settlements and the uninsured period. Ellen stood again. If I may, you should also contact an attorney who specializes in HOA management and potential board liability. And you may want to report this to the Arizona Department of Real Estate. Patricia nodded. Agreed. We'll be reaching out to professionals immediately. For now, I need to warn everyone in this room that until we get insurance reinstated, please be extremely careful in all common areas. Use the pool at your own risk. We'll be posting warning signs tomorrow. A woman in the back raised her hand. Can we be sued personally if something happens? Potentially, Ellen said. Though typically, the board members are the ones who bear personal liability for HOA mismanagement. But everyone's home equity could theoretically be at risk if there's a major lawsuit against the HOA that exceeds available funds. That caused another eruption of worried conversations. People started leaving, many of them angry, some frightened. I stayed behind with Ellen to talk to the remaining board members. Patricia rubbed her temples. This is a nightmare. How do we even begin to fix this? First, call every insurance company in Arizona and explain the situation, Ellen said. Be completely honest. You'll probably pay astronomical premiums, but you need coverage immediately. Second, hire a forensic accountant to review every transaction Karen made as president. Third, consider whether you need to report her to the police for potential embezzlement or fraud. Police, Michael said. Is it really that serious? She spent $90,000 of HOA money without board approval, Ellen said. That's not a small matter. Patricia made a note. We'll consult with an attorney on that point. Aaron, I want to apologize to you personally. If you hadn't pushed this issue, who knows how long this would have gone on. I just wanted to know about the insurance, I said. I never expected all of this. Well, you did the community a massive service, James said. Even if it's going to cost us a fortune to fix. Over the next few days, the full scope of the disaster became clear. Patricia, now acting president, called an insurance broker who specialized in HOAs. The broker, a man named David Foster, came out to meet with the board on Saturday morning. I was invited to attend as the homeowner who had uncovered the issue. David reviewed the situation and shook his head grimly. This is bad, folks, really bad. No insurance company wants to touch an HOA that operated without coverage for over a year and had multiple unreported incidents. You're going to be considered extremely high risk. What are our options? Patricia asked. I can probably get you coverage through a surplus lines carrier, but it's going to be expensive. I'm talking premiums of $50,000 to $60,000 a year compared to the $12,000 you were paying before the policy lapsed. Michael winced. That's going to require a special assessment. We don't have that kind of money in the operating budget. How much would the assessment be per household? I asked. David did the math. 300 homes, $60,000 annual premium, that's $200 per home. But you'll probably want to do a larger assessment to rebuild your reserves that Karen depleted. Patricia sighed. So we're looking at probably $500 per household as an immediate special assessment. At least, David said. And that's just to get basic coverage and start rebuilding your reserve fund. You still need to do a complete property inspection, address any safety issues that might affect insurability, and probably upgrade some common area features to meet current insurance standards. The board authorized David to start shopping for coverage immediately. In the meantime, they posted warnings throughout the community about the lack of insurance and the risks of using common areas. The pool was drained and closed indefinitely. The playgrounds were roped off. The clubhouse was locked. Word spread through Pine Ridge and the surrounding communities. The local newspaper, the Pine Ridge Tribune, picked up the story. A reporter named Susan Martinez called me for an interview. "Mr. O'Brien, is it true that a single complaint from you brought down the entire HOA insurance?" she asked. "That's not quite accurate," I said. "The HOA lost their insurance 14 months ago because of unreported incidents and probably unpaid premiums. I just uncovered that it was missing." "And the president had been covering it up?" "According to what came out in the board meeting, yes." The article ran on the front page of the Tribune 3 days later with the headline, "Sunset Valley HOA operated without insurance for over a year, president ousted." The story detailed Karen's settlements, the depleted reserves, and the upcoming special assessment. My phone started ringing with calls from other homeowners, some thanking me, others angry about the assessment. One call stood out. It was from a lawyer named Thomas Brennan, who represented the family whose elderly mother had broken her hip at the pool. "Mr. O'Brien, my name is Thomas Brennan. I read the article in the Tribune, and I need to talk to you about the settlement my clients received from your HOA." "What about it?" "According to the article, the HOA didn't have insurance when my client was injured. The settlement agreement we signed stated that the payment was coming from the HOA's insurance carrier. If that was a lie, the settlement might be voidable, and we could sue for much more." My heart sank. How much more? My client had extensive injuries, hip replacement surgery, months of physical therapy, permanent mobility issues. Her medical bills alone were over $100,000. We settled for $30,000 because that's what the insurance coverage limits supposedly were. If there was no insurance, we're not limited by policy caps. We could sue for the full amount of damages, which I'd estimate at $500,000 or more. This was exactly the nightmare scenario Ellen had warned about. If the settlements Karen had made were voidable because they were based on false representations about insurance coverage, the HOA could be facing massive lawsuits that would bankrupt the entire community. "I'm not the right person to talk to," I said. "You should contact Patricia Henderson, the new HOA president." "I intend to, but I wanted you to know that your complaint may have opened up significant legal issues for your community." After he hung up, I immediately called Ellen Davis. "Ellen, we might have a bigger problem than we thought," I said, explaining the call from Thomas Brennan. "That's the risk when settlements are made under false pretenses," Ellen said. "If Karen told those families the money was coming from insurance when it wasn't, and if that representation was material to their decision to settle, they could potentially rescind the settlements and sue. What can we do? The board needs to immediately consult with a civil litigator who handles personal injury defense. They should also consider whether they need to file a claim against Karen personally for indemnification." "Sue Karen? She's the one who made these settlements without authorization and apparently made false representations. If the HOA ends up paying out huge judgments because of her actions, they may need to try to recover from her personally." That afternoon, I attended another emergency board meeting where Patricia shared that she had been contacted by Thomas Brennan. "He's threatening to sue for $500,000, she said, her face pale. "And he says the other families might do the same if they find out the settlements were based on misrepresentations." "Can we fight it?" James asked. "I spoke with an attorney this morning," Patricia said. "He thinks we're in a very weak position. Karen did make representations about insurance coverage in the settlement agreements. If we try to enforce those settlements now, the families could claim fraud." "So what do we do?" Michael asked. "We're probably looking at having to defend multiple lawsuits, which means we need significant cash reserves for legal fees and potential judgments. The attorney suggested we might be looking at a special assessment of $3,000 to $5,000 per household." The room erupted in groans and angry mutters. I felt sick. I'd just been trying to get information about insurance. Now, 300 families were potentially facing $5,000 assessments because of what I had uncovered. "There's one other option," Patricia said quietly. "We could sue Karen Whitmore personally for breach of fiduciary duty, conversion of HOA funds, and potentially fraud. If we can recover the money she misused and make her personally liable for the settlements, it might shield the homeowners from the worst of the financial impact. Would that even work? I asked. Does Karen have enough money to cover all this? We don't know yet, but we have to try. Over the next week, the board hired a litigator named Frank Morrison to handle the potential lawsuits from the injured parties. They also hired another attorney named Rachel Saunders to pursue claims against Karen. The community was in chaos. Angry homeowners were posting in the Facebook group demanding answers. Some were threatening to stop paying HOA dues in protest. Others were organizing a recall election for the entire board, even though Patricia, Michael, and James had only just started trying to clean up Karen's mess. I was getting nasty messages and emails from homeowners who blamed me for the crisis. One message read, "You just couldn't leave well enough alone, could you? Now we're all going to lose our homes because of your vendetta against Karen." Another said, "This is your fault. You should pay the entire assessment yourself." Ellen advised me to document all the harassment and not respond. "You did nothing wrong, Aaron. You asked a legitimate question about insurance that any homeowner has the right to ask. The fact that it uncovered massive mismanagement isn't your fault." But it was hard not to feel responsible as I watched the community implode. Property values in Sunset Valley started dropping as word spread about the uninsured period and the potential assessments. People who were trying to sell their homes found buyers backing out once they learned about the situation. Then, 2 weeks after the initial board meeting, something unexpected happened. I got a call from a Pine Ridge police detective named Sarah Coleman. "Mr. O'Brien, I'm investigating a complaint filed by the Sunset Valley HOA against Karen Whitmore. I understand you were the one who initially uncovered the insurance issues?" "Yes, that's right. I'd like to meet with you and get your statement about what you found and when." We met at a coffee shop in downtown Pine Ridge that afternoon. Detective Coleman was a serious woman in her mid-40s with sharp eyes and a no-nonsense demeanor. "Walk me through everything from the beginning," she said, pulling out a recorder. I explained the fence dispute, my inquiry about insurance, the discovery that the policy had lapsed, the emergency board meeting, and everything that came out about the settlements and depleted reserves. "Did Mrs. Whitmore ever explain where the money went?" Detective Coleman asked. "She said she used it for the settlements with the injured parties." "Did anyone verify that the families actually received those amounts?" I paused. "You don't think so? The board was focused on the fact that she spent the money without authorization. I assume they verified the families got paid when they did their financial audit. According to the forensic accountant's report that the HOA provided us, there's a problem. The checks to the 3 families total only $55,000. Not $90,000. There's $35,000 that went somewhere else." My stomach dropped. "Where did it go?" "That's what we're trying to figure out. There were multiple transfers from the HOA reserve account to an account at a different bank. The forensic accountant is still tracking down whose account it was, but it doesn't appear to be any of the families who were injured." "You think Karen stole money from the HOA?" "I think it's a possibility we're investigating. Embezzlement is a serious crime in Arizona, especially when you're talking about amounts over $25,000. That's a Class 2 felony." Over the next few weeks, Detective Coleman's investigation expanded. It turned out that Karen had been siphoning money from the HOA for nearly 3 years, not just during the period after the insurance lapsed. The forensic accountant found irregular transfers totaling over $70,000 to an account in Karen's name. She had apparently been using HOA money to fund personal expenses, including a timeshare in Cabo San Lucas, a new car, and expensive shopping trips. The embezzlement was separate from the settlement payments, which meant Karen had stolen money and then compounded the problem by making unauthorized settlements that depleted the reserves even further. The total damage she had done to the HOA's finances was staggering. In early May, Karen Whitmore was arrested at her home and charged with multiple counts of theft, fraud, and embezzlement. The local news covered her perp walk, showing her in handcuffs being led to a police car while neighbors watched. I felt a complicated mix of vindication and sadness. This woman had been a pillar of the community for years, serving on the board, organizing neighborhood events, pretending to care about property values and community standards. And the whole time, She had been stealing from us. The criminal charges changed the dynamics of the civil situation. Frank Morrison, the litigator handling the potential lawsuits from the injured families, was able to negotiate new settlements based on the HOA's improved insurance position. David Foster had finally secured coverage through a surplus lines carrier, though the premium was even higher than initially quoted at $75,000 per year. The new insurance company agreed to cover future claims, but explicitly excluded any liability related to incidents during the uninsured period. The family of the woman with the broken hip agreed to accept an additional $40,000 to release all claims, with the payment structured over 2 years. The other two families accepted smaller additional payments. In total, the new settlements cost the HOA another $80,000, but it was better than the potential $1 million exposure from going to trial. The special assessment was ultimately set at $4,500 per household, payable over 12 months. The money would cover the insurance premiums, the additional settlement payments, legal fees, and start rebuilding the reserve fund. Homeowners were furious, but most recognized there was no alternative. A few threatened lawsuits against the board, but Ellen reviewed the board's actions and confirmed they had handled the crisis appropriately once they discovered the problems. Karen's criminal trial was scheduled for September. In the meantime, the HOA filed civil claims against her for recovery of the embezzled funds. Her attorney tried to negotiate a settlement, but Rachel Saunders, the attorney handling the civil case for the HOA, refused to back down. They put a lien on Karen's house and went after her other assets aggressively. By June, my life had mostly returned to normal, though I was still dealing with occasional hostile comments from neighbors who blamed me for the assessment. I had become an unlikely hero to some and a villain to others. The fence that started the whole thing remained unpainted, and nobody from the new board bothered me about it anymore. One evening in late June, Patricia Henderson knocked on my door. She looked exhausted but relieved. "I wanted to give you an update," she said. "Karen's attorney contacted us today. She's going to plead guilty to the criminal charges in exchange for a recommendation of probation instead of prison time. As part of the plea deal, she's agreeing to full restitution." How much can she actually pay back? She's selling her house. After the mortgage is paid off, there's about $120,000 in equity. She's also liquidating other assets. We should recover about $150,000 total, which will offset a significant portion of the special assessment. So people won't have to pay the full $4,500. We're hoping to reduce it to about $3,000 per household once we get the restitution money. It's still a lot, but better than where we started. I nodded. "How are you holding up?" She smiled tiredly. "I never wanted to be HOA president. I just wanted to serve my community. But this experience has been eye-opening. We've completely overhauled our financial controls. We have 2 board members who have to sign off on every check now. We're requiring monthly financial reports to all homeowners, and we're never, ever letting one person have this much unchecked authority again." "That's good to hear. Aaron, I know a lot of people have given you grief about this, but I want you to know that you did the right thing. If you hadn't pushed for answers about the insurance, Karen would probably still be stealing from us and we'd still be uninsured. Eventually, something catastrophic would have happened and the whole community would have been destroyed financially. You prevented that." "I just wanted to know about the insurance," I said, echoing what I had told Ellen weeks earlier. "Sometimes that's all it takes. One person asking the right question." Karen's plea hearing happened in early September. I attended along with about 50 other Sunset Valley homeowners. The courtroom was packed as Karen stood before the judge, looking much smaller and older than she had when she was HOA president. The prosecutor laid out the charges: 3 counts of theft, 2 counts of fraud, and 1 count of embezzlement. The total amount stolen was $73,000. With the unauthorized settlements included, the total financial damage to the HOA was over $200,000. Karen's attorney, a public defender named Mark Stevens, argued for leniency. "Your Honor, Mrs. Whitmore has been a dedicated community volunteer for many years. She made serious mistakes in judgment, but there was no malicious intent. She's agreed to full restitution and has already taken steps to liquidate her assets." The judge, a stern woman named Honorable Lisa Martinez, looked unimpressed. Mrs. Whitmore, you were in a position of trust. 300 families relied on you to manage their community properly. Instead, you stole from them, lied to them, and left them exposed to catastrophic financial and legal liability. Your actions went far beyond mistakes in judgment. This was calculated theft over an extended period. Karen started crying. I'm sorry. I know what I did was wrong. I never meant for things to get so out of control. But they did get out of control because you made them that way, Judge Martinez said. I'm accepting the plea agreement, but I want to make something clear. You're getting probation instead of prison time, only because you've agreed to full restitution and because you have no prior criminal record. But you will have a felony conviction on your record for the rest of your life. You'll serve 5 years of supervised probation. You'll complete 200 hours of community service, and you will pay full restitution of $200,000 to the Sunset Valley HOA. Yes, Your Honor, Karen said quietly. If you violate probation in any way, you will serve the suspended sentence of 7 years in state prison. Do you understand? Yes, Your Honor. The judge banged her gavel. This court is adjourned. As we filed out of the courtroom, I saw Karen being led away by her attorney. She glanced at me briefly, and I saw a mixture of anger and shame in her eyes. I felt no satisfaction in her downfall, only a sad recognition that she had done this to herself. Outside the courthouse, several homeowners approached me to shake my hand and thank me. Others walked past without acknowledging me. The community was still divided about my role in everything that had happened. By October, the dust had finally settled. The insurance policy was firmly in place, expensive but comprehensive. The board had implemented new financial controls and transparency measures. The special assessment had been reduced to $2,800 per household after the restitution money from Karen came through. The pool reopened with new safety features and stricter rules. The playgrounds were inspected and upgraded. The community was healing, though the scars remained. I received a letter from the Arizona Department of Real Estate informing me that they had completed their investigation into the Sunset Valley HOA. They found multiple violations of state law during Karen's tenure and imposed fines on the HOA itself. However, they commended the current board for their prompt remedial actions and transparency in addressing the issues. Ellen Davis called me one afternoon in late October. Aaron, I wanted to let you know that I'm writing a case study about your situation for an HOA management journal. Your story illustrates perfectly why homeowners need to be vigilant about their HOA's operations and why transparency is so critical. Am I going to be famous? I joked. You might be in HOA circles. What you did, standing up and asking questions when something didn't seem right, that's exactly what more homeowners need to do. HOAs only work when there's accountability. In November, I received an official letter from the Sunset Valley HOA board, signed by all members including Patricia. It read, Dear Mr. O'Brien, on behalf of the Sunset Valley community, we want to formally thank you for your diligence in uncovering the serious financial and operational issues that threatened our community. While the process of addressing these issues has been difficult and expensive, your actions prevented a far worse outcome. We recognize that you faced harassment and blame from some community members, and we apologize for not more actively defending you during that time. The board has established the Aaron O'Brien Accountability Award, which will be given annually to a homeowner who demonstrates exceptional commitment to HOA transparency and proper governance. You will be the first recipient. Thank you for your service to this community. The award ceremony was held at the clubhouse in December. About 100 homeowners attended, which was a good turnout considering the lingering divisions in the community. Patricia presented me with a plaque and a gift card to a local restaurant. Aaron asked the right question at the right time, she said in her speech. He didn't do it for recognition or reward. He did it because he wanted to know if his community was properly protected. And when he didn't get a straight answer, he kept pushing until he found the truth. That's what every homeowner should be willing to do. There was applause, though I noticed some people in the back of the room didn't join in. That was okay. I hadn't done any of this for appreciation. I had done it because leaving 300 homes uninsured for over a year was unacceptable, and someone needed to hold the HOA accountable. In my brief acceptance speech, I said, I never set out to bring down a HOA president or expose embezzlement. I just wanted to know about our insurance policy. But what I learned is that HOAs only work when everyone pays attention, not just the board, but every homeowner. We can't assume that the people we elect to lead our communities will always act in our best interests. We have to verify, we have to ask questions, we have to demand transparency. And if we find problems, we can't look away just because addressing them might be uncomfortable or expensive. Thank you to the current board for having the courage to clean up this mess, and thank you to the homeowners who supported getting to the truth, even when it was painful. As I drove home that night, I thought about everything that had happened over the past 9 months. A simple question about insurance had led to the discovery of embezzlement, fraud, and catastrophic mismanagement. It had cost the community millions of dollars when you factored in the special assessments, legal fees, property value impacts, and stress. Karen Whitmore was now a convicted felon who had lost her home and her reputation. 3 families who had been injured at the community pool had gone through multiple rounds of settlement negotiations, and 300 families had learned a hard lesson about the importance of HOA oversight. But the alternative would have been worse. If the insurance situation had remained hidden, eventually something catastrophic would have happened. A drowning at the pool, a major injury at the playground, a massive lawsuit that bankrupted the entire community. Karen's embezzlement would have continued, draining more money from the reserves. The problems would have compounded until they became truly unsolvable. My single complaint, my single question about insurance, had pulled the thread that unraveled the entire sweater. But the sweater was already coming apart. I had just been the one to notice and point it out. As I pulled into my driveway, I looked at my fence, still the same beige color that Karen had objected to 9 months earlier. It looked fine to me. And more importantly, nobody was going to fine me $500 for it anymore. I walked into my house, poured myself a drink, and sat on my back patio looking out at that fence. In the distance, I could see lights from other homes in Sunset Valley, families going about their evening routines, probably not thinking about HOA insurance or board meetings or special assessments. Life had mostly returned to normal for them, and that was good. That was how it should be. Communities need to function smoothly, with competent leadership and proper safeguards, so that homeowners can focus on their lives instead of HOA drama. But I had learned something important through all of this. Vigilance matters. Asking questions matters. Holding leaders accountable matters. And sometimes one person asking one question can make all the difference between a community that thrives and one that fails. I never wanted to be that person. I just wanted to know about the insurance. But I'm glad I asked. Because 300 homes deserved better than Karen Whitmore's corrupt and negligent leadership. They deserved protection, transparency, and competent management. And now, finally, they had it. The special assessment payments continued throughout the winter and into the spring of the following year. By then, almost everyone had accepted the reality of the situation and moved on. The quarterly HOA meetings were now well attended, with homeowners much more engaged in the community's finances and operations. The board published detailed financial reports monthly and held open question and answer sessions. Karen made her restitution payments on schedule, the money coming from the sale of her house and other assets. She moved to a small apartment in Mesa and took a job at a retail store. I saw her once, months after the plea hearing, at a grocery store in Pine Ridge. She saw me too and quickly turned down another aisle. I let her go. There was nothing more to say. The insurance company that had initially canceled the policy 14 months before the crisis, Western States Insurance Group, sent a representative to meet with the new board in March. They wanted to explain their side of the story and potentially bid for the HOA's business again now that proper controls were in place. The representative, a man named Richard Walsh, met with the board and several interested homeowners, including me. We canceled the previous policy because Mrs. Whitmore repeatedly failed to report incidents and didn't pay premiums on time, he explained. We sent multiple notices of cancellation, but she told us she was addressing the issues. When she didn't, we had no choice but to terminate coverage. We tried to work with her, but she made it impossible. Did you notify the board that the policy was being canceled? Patricia asked. We sent notices to the HOA's registered address, which was Mrs. Whitmore's home. We assumed she was forwarding information to the board. We had no way of knowing she was keeping everything to herself. It was another piece of the puzzle. Karen had isolated herself as the sole point of contact with vendors, insurance companies, and the management company, which allowed her to hide problems and steal money without anyone noticing. The new board had ensured that multiple board members received copies of all official correspondence to prevent this from happening again. Western states ultimately provided a competitive bid for the insurance, and the board decided to give them the contract starting the following year. The premium was higher than it had been before the crisis, but significantly lower than what the surplus lines carrier was charging. It was a sign that things were slowly returning to normal. By summer, property values in Sunset Valley had stabilized and even started recovering. Buyers were reassured by the new transparency and oversight measures the board had implemented. The story of the insurance crisis became part of the community's history, a cautionary tale about what happens when oversight fails. I continued living in my home, working remotely, enjoying my properly colored fence. The Aaron O'Brien Accountability Award was given to another homeowner the following December, a woman named Sandra Perez, who had discovered and reported improper bidding procedures for landscaping contracts. The tradition of vigilance was continuing. Looking back on everything that happened, I realized that my single complaint about insurance had done more than just expose Karen Whitmore's crimes. It had fundamentally changed the culture of the Sunset Valley community. Homeowners were more engaged, the board was more transparent, and everyone understood that accountability wasn't optional. 300 homes had gone uncovered because one person failed in their duty to protect the community. But those same 300 homes were now better protected than ever because one person had asked the right question at the right time. I never wanted to be a hero or a whistleblower. I just wanted to know about the insurance. But sometimes that's all it takes to change everything. One question, one complaint, one person refusing to accept a non-answer, and in the end, that single complaint saved the community from a disaster that could have destroyed it completely. The cost was high. The process was painful, but we emerged stronger, wiser, and better prepared to prevent such failures in the future. That fence Karen complained about still stands in my backyard, a reminder of how a petty dispute over paint colors led to uncovering a crisis that threatened an entire community. Every time I look at it, I remember the importance of asking questions, demanding accountability, and never assuming that the people in charge are doing their jobs properly. Because they might not be. And if nobody asks, nobody finds out until it's too late. But I asked, and 300 families are better off because I did.